welcome back to another deep dive into the fast-evolving world of crypto and finance. This week, we explore a massive milestone for Bitcoin, an unexpected Trump media crypto crossover, Ethereum's ongoing struggle, global commodity tension. Strap in, this is going to be a wild one. Trump Media and Crypto.com join forces, made in America digital ETFs. Donald Trump's media company has taken a surprising step into crypto, finalizing a new agreement with Crypto.com. The deal? Launching a new suite of made in America digital asset and stock ETFs. This isn't just a flashy partnership, it's a strategic move signaling Trump's growing interest in bringing crypto into the mainstream with a strong patriotic branding twist. But there's more. These ETFs aren't just focused on traditional tech, they're eyeing blockchain startups, AI-infused finance platforms, and even metaverse infrastructure. Trump's alignment with Crypto.com could mark a major pivot in how crypto is viewed by traditional investors. Some see it as opportunistic politics, others as visionary investing. But either way, the markets are watching. This deal may also aim to counterbalance rising international competition in crypto innovation, especially from Asia and Europe, by keeping digital financial innovation firmly rooted in U.S. soil. Will it work? Too early to tell. But this could be one of the most high-profile crypto endorsements of the year. Bitcoin breaks $90,000 barrier for first time in 6 weeks. Bitcoin has done it again, smashing through the $90,000 mark for the first time in over 6 weeks. After weeks of sideways movement, this breakout has reignited bullish sentiment across the board. Investors are speculating, is this the start of a renewed rally, or just a temporary spike in an ongoing consolidation phase? On-chain data shows a significant uptick in whale activity. Large wallet holders are buying again, and that's historically been a strong indicator of longer-term confidence. Meanwhile, retail investors are cautiously re-entering the market after the recent correction scared many off. Traders point to a combination of macro factors fueling the pump: lower inflation numbers, easing Fed rhetoric, and renewed ETF inflows. But skeptics warn, don't expect a straight line to $100,000. Volatility remains high, and with geopolitical tensions still simmering, the next few weeks could define the next leg of Bitcoin's journey. Either way, $90,000 is a psychological milestone that signals crypto's resilience, and it's got the whole world watching. Ethereum BTC ratio hits 5-year low, Ethereum under pressure. Ethereum is taking a hit, and not just in price. The ETH BTC ratio has now dropped to a 5-year low, sparking concerns about Ethereum's weakening dominance in the crypto market. While Bitcoin continues to attract institutional money and media hype, Ethereum seems to be lagging in the shadows. The ratio slump tells a deeper story. Bitcoin is becoming the primary safe haven asset in crypto, while Ethereum's narrative around smart contracts and DeFi innovation is struggling to regain momentum. Layer 2 adoption, scalability upgrades, and staking improvements haven't been enough to close the performance gap. Many analysts now argue that Ethereum is at a crossroads. If it can't differentiate itself beyond being the other big crypto, it risks falling further behind in market leadership. Still, developers are optimistic. New roll-up technology and zero-knowledge integrations could provide the jolt ETH needs. But for now, the market is giving its vote of confidence to Bitcoin. Gold prices hover near record high. Trump versus Fed clash fuels uncertainty. Gold is glistening again. Prices have surged past $3,400, hovering near all-time highs. One of the biggest drivers? The growing feud between Donald Trump and the Federal Reserve. Trump has ramped up his criticism of Fed policy, warning that ongoing interest rate strategies are damaging the economy and hurting American competitiveness. These comments have injected major uncertainty into the market, especially among international investors worried about political instability in the U.S. As a result, gold, a traditional hedge against chaos, is back in demand. The Fed, meanwhile, is holding its ground, insisting that inflation control remains its top priority. Some analysts suggest that this clash could echo the early 1980s when political pressure collided with monetary tightening. If tensions escalate further, expect even more capital to flow into hard assets like gold, and possibly into Bitcoin as digital gold, too. This power struggle isn't just about rates. It's about control over America's economic narrative, and investors are paying close attention. That's a wrap for this week's headlines, from political power plays to digital asset revolutions. Stay tuned, stay informed, And as always, keep questioning the narrative. Until next time.